Good morning, all. January the 5th. Geez, the New Year's moving along pretty swiftly, isn't it? Just had the ADP report out. As we get started, we'll just have a quick look at that, shall we? A much higher number than expected. And of note, and remember, we got the jobs number out on Friday, so it's all jobs this week. What of note was small business was up 204,000 employment change versus 115,000. Medium businesses were up 214,000 versus 142,000. And large businesses were up 389,000 versus 277,000. So big rises across the board here and that's for December, of course. The market's reaction was fairly minimal. We see the S&Ps have moved up ahead on it. Oil has been moving up all morning. But let's go. Just wanted to update on that real quick as it just dropped. So let's look what's happened overnight. Still more of the same as far as buying S&Ps, selling Nasdaq. We see that in fair value. So again, that means growth is trailing value by a large margin so far to start the year. Growth really referring to the more riskier situation in this exam. Rates have been the big issue for the last few days. So they have settled down a bit pre-market. Again, most of the talk is on Omicron. And I flicked through a bit of Twitter this morning and I saw some interesting streams, if you would like, on the crisis. One I found interesting was a chap at one of the restaurants talking about Cisco, the food providers. And they're finding it very difficult to get basic foodstuffs. I mean, a lot of this, we kind of brush off as fire and brimstone, etc. But it does seem legitimate. A lot of people wade in through the country. If someone that large, it could have multiple factors, of course. It is the start of the new year, staffing elements, etc. But these are all things that are there. Is it because of an overkill of safety from Omicron? Can you not be too safe? There's all different arguments there, but just something to keep in mind how that goes. There was a report I saw floated around too about both sides of the aisle in the US talking about discussing more additional COVID relief funding. This could be, of course, there's one thought this is a way to backdoor the bills that just have not been passed, play that card, but it is real. It's not a card. There is a lot of people in a lot of distress. We also have, as far as stocks go, Boeing is up, symbol BA up just a tad on possible purchase order from ALGT. And we see news of Beyond Meat up on news of the KFC deal. I'm sorry, I just can't get my head around that one. We also have Walmart gaining up on announcing more in-home delivery reach. This is significant potentially, given Amazon has been rather, I wouldn't even say obtuse about dropping their same-day delivery aspect. That was their big deal. Is that just because they've already been saturated? Is it genuine because of the supply crisis? And there's an interesting note on that we have on the website, and no doubt people are cynical on it, but the New York Fed yesterday released a new index they've been working on called the Global Supply Chain Pressure Index. And it's interesting stuff. Just go to tradescommunity.com, you'll see it. And they break it all down into the aspects that make that move. But they're basically saying they remain high, but have begun to moderate. So are they at a peak? It's worth looking at how they work it out. They work it out with the different countries of the world: Euro, China, Japan, South Korea, Taiwan, UK, and US. that are involved in the major parts of the shipping. What I found interesting was Australia's not in that limit, given it's so isolated, but also the commodity engine for the world. So perhaps it's in there in the back way. I read it briefly last night when it was put up. And they also look at the shipping rates. Obviously, we're all familiar with BDI, but there's also the HARPEX. And there's also an interesting study from the BLS about the cost of air transportation of freight to and from the US. Some good graphs there for you to go through, but worth looking at. Okay, so as far as Europe goes, Europe is all up this morning so far. And as far as treasuries go, just back on that, remember we have the FOMC minutes. It is old news, but it seems to get rehashed. It's kind of one of those weird things of the market. And on oil again, we did have API out yesterday. So let's go through the charts real quick. So looking overnight on the S&P, guess what? We're still in that sideways band. We're basically in one Murray Math channel. And we're sitting, there's really not a lot to talk about. We know where our support and resistance is just from this channel, basically. Do we stay in the channel or get out? As I said, the key thing I'm watching is still this hourly channel. We broke down through yesterday, gave us a good short. Look what we got here. We need to get above all this to really get going. Does it need a catalyst? Of course it needs a catalyst. But the question is, what is it? Is it the Fed minutes? Is it something else? We also have the services PMI. And I think at some point we're going to just talk about jobs. The market's going to talk about jobs. We just looked at that big ADP number, big beat there. So that does get it upbeat. We're back in that situation though. Hey, we need people working to get the supplies moving versus the Fed raising. A lot of talk about cash carry going to two positives. The Dove. Look, I've followed this bloke for a long time, ex-Goldman boy. A lot of what he says is done with purpose, true, but all he's really doing is on the bandwagon, for want of a better word, or the common theme out of the Fed. And watching that bloke, a lot of what he's saying is he reverses very quickly, or there's a reason for it, or he's just, don't read too much into it. The rates, to me, there's a great, and I put it on our timeline, and if you're not following her, you should. And I know I always get her name wrong, but Lisa Abrahamowitz at Bloomberg really knows her stuff on bonds and that whole fixed interest game. But she makes a very good point. And she says the theme of early 2022 seems to be borrowers locking in low funding costs before interest rates rise, which has been the theme at most board meetings and earnings reports. If you've looked at them with companies moving ahead, they're either doing that or raising capital by secondaries or something. And we're doing it. We're looking at, okay, housing rates are going up. We want to lock it in. So that tends to all happen around the start of the year. Why? A lot to do with December 31 is a tax year for the United States. And it's a good point here. Top-rated US corporations are selling debt at an elevated clip, creating a technical pressure on treasury yields. What does that mean? Well, it means there's more paper available, so to be more attractive, yields go up, bonds go down. So it's all supply and demand. High-grade yields are the highest since 2020. Again, that's very, very indicative of what's going on. As far as the world's going, correct? So interesting stuff there and worth following. If you don't follow her, I think she does a great job, and with the experience and the network that she has. Okay, so just wanted to put that in there as that strolled across. Thank you for that message again. 5 minutes here. we can see on a 5-minute basis all we've done overnight. We did have this little rush down here earlier. Remember, we had that big sell-off yesterday. We ran up. This is S&P. We're trying to get above this 5-minute cloud. Now, 5-minute in a thin market, be wary of. As far as daily, look at what's happening here. The Tenkan is pushing up sharply. And we got this pennant here. So, we're flattened out with our Chicow. Nothing too much there. We could just draw a little, some lines around this pennant would be a wise decision, I would think. It's very simple, right? Just do that. That's probably a little bit steep because this is more than likely, and here's a good way to do it. And this is, if there's a bigger ABC, what this could well be. So when you do a flag or a pennant, we're not getting that working there. But what we want to do is just simply copy this in a parallel. And so that's often what happens in this type of move. If I was to do a point and figure, this is a flagpole, and 80. I think you want to do statistics over about 84% of those are continuation. So that's our S&P. Now look at this. No change from yesterday, right? Pattern-wise. And for this to change, I think you're going to have to get Apple to rally. It's still sitting around 179. And definitely Microsoft and Apple need to change this one. Nasdaq. Down all night, we're back testing that cloud on the daily. Remember, we're testing support here. The bullish is a big W. The bearish is a double top, a failed double top. That's lower than that. The best double top, as we run through these stocks every week, as you know, the main ones we watch are Apple, Amazon, we watch ARK, and we watch Nvidia. A lot of them just tell us where the speculators are. What we've been saying for probably, well, really ever since the Bezos family decided to liquidate quite a bit of their holdings and travel around the world in yachts and try to go to space, is the double top. Very similar to this overall. Though this is short term. It's been building it over a longer time. So we do need that also that's your bigger picture play as far as Amazon goes. Amazon's also in a bit of a shake, as we talked right at the start with Walmart. Okay, so if we look at Russell, it's very early in the morning, pre-market, very thin, but keep an eye on that. Look at this though. To me, this isn't a healthy trading vehicle. There can be, it's not even getting to good sell points and good buy points. I mean, it's in the sell zone when it's doing this thing. But if you need to be on at good levels, control your size, and then yes, you can benefit there. And here's Apple. Again, we could not get back over that Tenkan in the pre-market in the end of yesterday. We really need to get back over that. We're coming at the clouds pressuring. So it's jammed in here. And this, of course, was the $3 trillion deal. Anyone talk about triple tops? That's at play there. So just keep that close to hand. And now, okay, let's look at our main. We got EIA out today. The Department of Energy reports their storage. We had API last night. That's all on your website. And it just looked like a similar end of year. Remember, this is very important. The tax situations and all that for oil companies and their storage situations over the holiday. So what we did see was a much bigger draw on overall crude. We saw a big build as expected on Cushing, and we saw big builds in gasoline and distillate. So here we are pushing, and remember also, of course, we had OPEC yesterday. So that we went through that yesterday afternoon. But look, we're pushing up pre-market right into R1, which is 77 for the number of people. That's probably means something. So we're pushing up from that. We did flip back over the pivot this morning. As far as the hourly goes, you can see that's what we've been talking about for quite a while. This big triple top, we broke through it, we retested it, and we did a spit of a spit is all this. The Cajun held it all. And we're doing all this work over plus 1/8. So remember, just very simple, when it breaks plus 2/8 or 1/8, comes down and retests for it to be an oversold completion, it needs to not hold. Well, we've held there at this point. So, and if we come down to the daily, that's what we've been talking about. It got sideways, remember it tested, tap, tap, tap. Again, you need impulse off these patterns. So if you're trading Ichimoku, it's all about feeling what's going on and understanding, and that's why we put in the other aspects to keep you honest on that, right? So, nice stuff there. Nasdaq, guess what it's done overnight? Not a lot, right? Trading, well, I mean, 5 cents it can be marginal, but look what it's doing. It's just riding that cloud. Again, this is all to do with weather. And the weather's flipped a little bit. We went from colder to warmer. Before the colder was warmer, the models I'm talking about. So the warmer models that caused this yesterday were really just rehashing what was going on over here, right? And then we had a drift up on that. And so keep an eye on that as we come in. And daily, we'll just have a quick look at that again. So you can see what it is. It's basically the daily tank, and if you're watching it, and we talked about how small the range is on the S&P Murray map. Look at it on natural gas. This is a whole month. That's a range. It's incredibly tight. And yet that's never really spoken about. All we hear about is what it did way back here and about Europe. But so remember, this is what you're trading right here. And it needs to get out of that band to get more energy going. What happens with this, and if you follow our friend Commodity Vol, he does a great job of watching this, is this vol gets compressed and compressed and compressed. What happens is that it gets too big on either side, and that's what often fuels these kind of moves. There's just too many people short calls, too many people short puts. That's what happens a lot in natural gas and commodity-based things. So we've had those numbers out this morning already as far as ADP. For the rest of the day, we do have, as I said, what we're also going to be looking for is, of course, the minutes. They're coming up. But we also have the services PMI. Other news that's out, AT&T is up a tad after they gave a healthy report of additions of their postpaid phone net additions. So that's the highest in over a year. So, and they're saying, so what's got to be interesting is a lot of these are based on things like HBO over the holidays. Does that stay? That's always a question with a lot of these. What's your name? Disney, similar. Intel got upgraded by Northland Capital. There are, we mentioned Beyond Meat with the Kentucky Fried Chicken. Hey, I thought, so here's an interesting one. Beyond Meat, the whole theory is you don't eat meat. Meat apparently is bad for you, or it's inhumane, whatever your answer is. But if it's a health aspect, I would have thought fried chicken and fried whatever it is, peas and crushed up, are very similar in the health department, the fried aspect being it. But hey, what do I know? So there we have that out. Overnight, we had Nikkei up a tad. Hong Kong was down 1.6%. Shanghai was down 1. We're getting more of the same there. We talked about the port being shut down yesterday. There's lots of reports about the different variations of the virus being worse than what it is. I mean, frankly, it's really hard to keep up with what's fake and real news to do with that, unfortunately. India was up, South Korea was down, and Australia was down a tad. As far as economic data, there was the PMIs are out for December. A lot of these, I'm kind of staying open-minded to see how Omicron has affected everything. Job adverts were down in Australia in December, down 5% from being up 9.9%. Again, that's probably more Omicron related than anything. So we really want to see how we come out the end of this, as far as that goes. From a trading point of view, that does, or more an investment point of view, does that mean, you know what, I've had enough of this, I'm out of stocks, or do you recycle into something else? Do you go to cash? Those are all decisions for your own personal situation. So just keep an open mind of what's going on. We do, and just another thing in that region while we're on it, if you recall last year, there was the big fallout between France and Australia over the submarine. Australia changed from France to America for a nuclear submarine. They won the nuclear option because of the whole what's going on in China and Australia. Well, Australia and Japan are in the midst of signing a defence and security tie agreement, Japan being one of Australia's biggest customers, if not their biggest, for many commodities. And as far as what we just saw back on PMIs, most of them were weaker in Europe. The EU's one itself is 53.1 versus 53.3. Germany's was still under 50, which was to be expected though, at 48.7. France up 57. That fits in it being the strongest stock market over there and hitting all-time highs, and it's at new all-time highs as we speak. So France, interestingly, is doing a lot better than everywhere else, and it does look like a mess when we look at the protests and stuff. Italy was over 50 again, 53. They were looking for 54. Spain was 55.8. What I'm noticing more than anything, Germany is the only one under 50 out of those European countries. So that's interesting. I find. Let's see, given Germany's the engine of everything, right? As far as inflation watches, inflation reports came out of Italy. They came out at 3.9% year on year. That was the fastest rate of price increase since 2008. So that's pretty well everything. You have your levels there. Stick to them so that you have a good trading range. Look for those news items. Remember, a lot of watch your bond rates again, and look at the reaction. Look at the reaction of the different markets, and try and stick with healthy dialogue with who you are using, etc. As far as your news sources or who you're getting off social media, etc. And try and see through a lot of the grandiose stuff. There's a lot out there. Have a great day. Thanks for listening. If you if you could, that's appreciated. Subscribe if you haven't already. Share it. The more feedback, the better, so we know that what we're actually doing here is valuable to people, or other things, and what perhaps isn't. Have a great day.